Well, for all you chamber executives who've joined us, we will have a recording of this for you. So I know some of you had members who were not able to join us but wanted the information. So good afternoon, everybody. I am Jeannie McIntyre. I am the president and CEO of the Greater Pompano Beach Chamber of Commerce, serving Margate and Lighthouse Point. But I also have the distinction this year of serving as the chair of the Broward County Council of Chambers. So that's why you see so many of my peers who have joined us today. And I feel very fortunate to have them all here with me. We've been doing a lot of collaboration and trying to get as much information as we can out to you all as the business community, because we know we are right along with you struggling through all of these changes. And I am very fortunate to have an excellent speaker for you all today. You're going to really enjoy him. But before we go there, I want to just give a shout out to all my partners. So if you guys can just wave as I call you out, so everybody can see who you are. And I am going to start with Sharinas, who is actually the incoming chair for next year from Davie Cooper City. Can wave, Shar? There. Okay, great. And I have Marie, who is our treasurer. Thank you, Marie, from the Greater Hollywood Chamber of Commerce. I have to say it the way Marie does. And then I have Randy, who was our past chair from Dania Beach. And I have Cindy, who is our secretary extraordinaire in perpetuity, it seems. She hasn't been able to get away from that role, from Coral Springs, Coconut Creek Regional Chamber of Commerce. And we have Leslie here, Lowenthal from the North Miami Beach. We have her picture there. She's clapping for you. And we have Norma English here from the Hallandale Beach Chamber of Commerce. And I know I saw Peter, but I don't see him. Is he up there? Okay, you're up in my corner, Peter. Sorry. I have Peter from the Tamarack North Lauderdale Chamber of Commerce. And I think that's all of us. I didn't miss anyone, right? Okay, great. Well, I'm going to go ahead and introduce our speaker. First of all, I'm going to give Holly a shout out just because she is Romeo's partner in crime, and I'm sure would be happy to answer any questions after the meeting. And we'll put her information is up in the chat already. So if you have any questions, Holly's a great resource. But our speaker today is Romeo Chico, CPA and founder and CEO of PayMaster, which is a payroll service headquartered in Palm Beach County. He started PayMaster over 25 years ago, and his company provides payroll processing, time attendance, human resource services to businesses from 1 employee to thousands. Romeo is very active in the payroll industry and sits on several boards, including the Independent Payroll Providers Association and the Payroll Fraud Protection Group. In 2016, he received recognition as Member of the Year. And in 2019, he received the Outstanding Contribution Award from the Independent Payroll Providers Association, an organization he's been a charter member of since 1997. He also spends time volunteering, and frankly, all your work this year has to go really high in that category, Romeo, and sits on a number of nonprofit boards. He has a lovely family, married to his wife for over 30 years, 2 beautiful children, and an adorable pup. He does live in South Florida, and he's one of the most hands-on owners you'll ever meet. He is not only committed to his clients, but frankly, through this entire crisis, he's been committed to helping the business community as a whole and has made himself available tirelessly to help anyone who needed assistance. He's a true subject matter expert for our chamber and for many organizations throughout South Florida. This is probably the 4th or 5th program he has run for me, and he is very thorough. And what I promise you is what seemed very confusing when you even read what was happening today will seem very understandable when he finishes. Romeo, thank you.
I will try to make it understandable. And that's where I've really kind of immersed myself in since the beginning of the pandemic. And just reading the acts when they come out multiple times and thoroughly, and coming to conclusions and trying to simplify it for clients, because there is a lot of bad information that circulates out there, even today. And, the more confusing it is for a company or a business owner, the less you're going to be able to take advantage of it. So I'm going to try to break it down simple. And today I'm really going to talk about one piece. So let me share my screen here. And we'll jump right in. Some of the confusion. Oh, and before I start, if you do have any questions, if you type it into the chat, I will try to keep an eye on that as I go along, and I'll try to answer the questions in line with the presentation. So just go ahead and put your questions out there. Today, what I'm going to be talking about mainly is the employee retention tax credit. And it is a piece of the act that came out last March in the CARES Act. It was modified in the Consolidated Appropriations Act, which President Trump passed in late December. And President Biden then further modified it in March in the American Rescue Plan Act. So this tax credit, which I think is a horrible description of it, and I'll explain a little more, has gone through many revisions, and that has also led to confusion. Now, before I jump into that, there are two little things that I wanted to cover, just to reiterate something that's been around. I saw some recent press on this because President Biden mentioned it the other day. They're trying to get everyone or as many people vaccinated. So in the March Act, President Biden expanded what has already been out there for a year under the Families First Coronavirus Response Act, or FFCRA. Employees are eligible for up to 2 weeks of paid leave that's paid for by the federal government. You get reimbursed for paying those employees through an immediate payroll tax credit. And what President Biden expanded on was that eligible leave now covers time off for immunizations for the vaccine or recovery from side effects. So an employee should be able to comfortably take time off and get paid for that time off, not affect any sort of vacation or sick time they may already have or not have. And you, the employer, will get reimbursed from the government for 100% of the wages, plus your share of employment taxes, and even health insurance, your cost of health insurance for that proportionate time the employee was out. This credit is taken on your 941 tax return, and it is an immediate credit. So you can short your very next tax deposit for your 941 payroll taxes by this amount. This went into effect on April 1st, and it expires on September 30th. So it's going to be around for a little while. This second one is another just quick little reiteration. This also came into effect on April 1st. And I saw an article on it yesterday that talked about unemployed workers are having a hard time getting insurance coverage as a result of this. And again, and I think it's just because there's a lack of information out there. But employees that have been involuntarily terminated. So involuntarily terminated is they were laid off, not for any fault of their own, not resignation or retirement, but they were just terminated. Anyone that was involuntarily terminated for the past 18 months, so literally from November 2019, any of those individuals are able to get back onto your company group health plan and not have to pay for it between April 1st and September 30th. So you, the employer, would end up paying for that premium, but again, you will get a 102% of that premium as an immediate payroll tax credit. So I just wanted to reiterate those two things. I'm not going to go over them too much, but if you have any questions, you can shoot them over to Holly or put them in the chat, and I'll try to answer them at the end. All right, so the retention tax credit, and we'll talk about that title in a moment. You can be eligible, or your business can be eligible, if you meet one of two conditions. Your business was fully or partially suspended, or your business revenue has decreased, and we'll go into the details of both of those items. But if you suspect any of either of these two items at the end, it's something you definitely want to look into. So the full or partial suspension, what that means is a government order, and it could be federal, state, county, city, local, just any government agency is restricting you from doing business in the same manner you were able to do business pre-COVID. If your business is shut down or suspended, but you can perform the same work from home, then you're not eligible for the retention credit. Of course, that doesn't work in the case of a restaurant or a service provider. So that is an exclusion there. And stay-at-home orders do not count as a full or partial suspension. So back when we were at a stay-at-home order for a period of time, unfortunately, if your customers couldn't leave their house to come and see you, that doesn't count. But if that were the case, then you quite possibly count under the revenue reduction, and we'll go over that in a moment. We all know a full suspension, your business is shut down, so movie theaters, performing arts venues, they were not able to open in any capacity. But a partial shutdown can mean a lot of different things, and I've listed some of them here. So you're forced to reduce hours. So there are restaurants or businesses in some areas that had to shut down by 6 o'clock. We were looking at a marina, and the marina had to close, I think, by 6 o'clock p.m. That's a reduction in operating hours. Reduction in operating capacity. So some retail businesses are restricted from more than 50% occupancy in their store. Or, as we know, restaurants had to restrict their occupancy for inside dining. That is a partial suspension. Changing how you operate business. So if you have a buffet restaurant and you were allowed to open, so maybe now you're allowed to open, but you can't have a buffet as you did before, that is a partial suspension. Also, if maybe you have multiple businesses, and so an example would be you have two stores. You have one here in Florida, and you have a business in California, and maybe it's a gym. And here in Florida, gyms are able to fully open. So this business may be doing well. But your other gym in Los Angeles is not allowed to open. So same company owns the two locations, but because one location is suspended and the other one is not, that counts as a partial suspension. So it could just be a piece of your business. Another example I use, and we have a case of a company that sells a lot of online merchandise. They have a storefront, and the storefront was closed, but their business online actually increased. So they were making more money, but because their brick and mortar store was closed, that falls under a partial suspension. So it could be a piece of your business. The IRS came out initially and they said the shutdown has to have a more than nominal effect. And then recently they came out and they defined that as 10%. So for example, if you've gone to Whole Foods, so in Whole Foods, they have the buffet section in there where you can grab food off of the hot buffet or cold buffet and box it, and maybe eat there. But the grocery store is open. It's an essential business. They would not count as a partial suspension because that buffet is not a greater than 10% effect on their business. It's a very small portion. And they're probably pre-preparing packaged meals and having it available there for you. So, so that doesn't count. But if you are a CC's Pizza, for example, and the buffet is your business, then that would certainly be a more than 10% effect. A couple of examples I thought I'd throw out here. So restaurants, there was a point in time where restaurants were closed, or bars and restaurants. Then it allowed 25% occupancy inside, and then we went to 50% occupancy. And it wasn't until in Florida, September 25th, that we went to phase 3. So a restaurant was partially shut down up until phase 3, with an exception. Even after phase 3, 24-hour restaurants were not allowed to open. So some of the restaurants that operate 24 hours they had to close for a period of time for nightly sanitation or sanitization. So that type of restaurant is still partially shut down. So, of course, if you have a breakfast and lunch diner and you're not open 24 hours, then the 24-hour restriction would not affect your business. So there's a question about chambers and events. And I was going to say we'll talk about that, but I actually don't think I have a slide for this. The IRS says that if you are restricted from holding events, so we did a nonprofit in Texas that they have a major fundraiser event, a gala every 3 months, and they were not able to hold that, and that counts as a partial shutdown. This one is also an interesting one. We have many dentists as clients, and I spoke to one a few months ago. I happened to be on the phone with him for another something else. And while I was on the phone, I said, "Hey, have you had us look at your employee retention credit?" And the dentist said, "No, that doesn't affect me because I am an essential business. I was not in any sort of shutdown." But that's not true. There is a point in time where they came out and said that elective surgeries could not be performed. Teeth whitening, braces, anything sort of elective, non-emergency, you could not perform. It was, mainly to stop patients from coming in and stop the spread, but it was also to preserve PPE back then. So even essential businesses may have had some portion of their business restricted. There's a question about hotels, and I don't know the dates, but there was a period of time in the order that stated hotels, you were not allowed to really open up for full tourism. it was for, I forget exactly how it's stated in the order, but, and it's a fairly short period of time. I think it's from March 17th, which is pretty much where everything took effect, I believe until sometime in May. If you have short-term rentals, so if you have, a kind of an Airbnb type of thing, the short-term rentals, those were restricted, I think, pretty much through phase 2. So it went much later that you could not have short-term rentals. But yes, hotels do qualify. And the hotels, businesses may not qualify based on the full or partial suspension, or maybe it's a short period of time. But you would then subsequently have a loss in revenue, and you could qualify under the loss of revenue, which is what we're going to talk about next. So he said there's 2 conditions: full or partial suspension, or a loss in revenue. And I have here what the loss in revenue is defined as. For for-profit businesses, it's the first sentence, is your gross receipt from total sales. It is after returns and allowances, so returns would reduce that. Nonprofits are eligible for this. So a nonprofit has revenue in the form of grants, donations, and gifts and interest. So all that counts as gross receipts. So let's look at a couple of examples here of how it's calculated. As we said initially, this is the accumulation of 3 different acts. And every time an act comes out, it changes the rules a little bit, sometimes retroactively. So the rules are different for 2020 and 2021. For 2020, the CARES Act made this effective March 13th. So that is the earliest date you can take this credit. And in order to qualify, the initial qualification is your business must have had 100 or less full-time employees in 2019. And I'm going to jump ahead a slide here because this is an important concept. What is a full-time employee? It is not FTE. So FTE is used for your PPP loans. It's used for other things. It is not used for this. This is full-time employee. And how you count that is you look at each month in 2019. And so we look at January, and you count an employee if they worked 130 or more hours in that month. If the employee worked 129 and a half hours, they don't count. You throw that number out. So if you have a fast food restaurant, or restaurants, we performed this calculation for a client that is a hotel on Miami Beach, and they have roughly 150 or so employees. And when we performed this count, they ended up literally at 100 employees. Those other 50 or so, they had a lot of seasonal employees that ended up not counting. They have a lot of part-time people who don't count. So don't rule this out if you say, well, I've got 160 people. You may still qualify. Just perform this count. And after you add up each month, you take the total, divide it by 12, and that is the average number of full-time employees. So for 2009, and the count is 2019. So for 2020, you need 100. Your business must have been suspended, fully or partially, and we talked about that. or remember it's either or, oops, your business must have been down by 50% revenue in any quarter in 2020. The look back period is 2019. And as soon as you make that 50% threshold, you remain eligible until your revenue comes back up where you're less than 20% reduction. So I was looking at a business the other week that had a 55% reduction in the second quarter, and then they were about 32%, and then they were about 24% for second, third, and fourth quarter. So they qualified under the gross receipts for the entire period of time from March 13th until December 31st. What the amount you're eligible for during that qualified period of time, you take 50% of the employee's wages up to $5,000 maximum per employee. So I put a little table on here. So this company has 5 employees. The wages paid is how much wages was the employee paid during that period of time you qualified. The maximum is there was a limit of $10,000 of qualified wages per employee for the entire year of 2020. So, I paid $50,000 in wages to 5 people. 2 people are limited based on that $10,000 cap. 50% of the wages is what you get back as a credit. So paying your employees $50,000, you're eligible to get $21,000 back. That is not a bad amount on that amount of wages. So that's why I'm saying this is fairly significant. For 2021, the Consolidated Appropriations Act and the ARP Act extended it through the end of this year, so all 4 quarters. It is now available to larger businesses, so you can have up to 500 full-time employees in 2019. So even though we're talking about 2021, our look back period is pre-COVID. So we always look back to 2019. Again, suspended, although it's a little hard in Florida to have a fully or partially suspended business because we are in phase 3. We're pretty much fully open. There are still some cases of suspension. So maybe movie theaters, as I said, I believe 24-hour restaurants, things like that. For the gross receipts, your revenue only has to be down by 20% in any quarter. And you look back to 2019, every quarter stands on its own. So maybe first quarter, you miss it, you're at 24%, but maybe this quarter, you're I should say, actually, you miss it, you're like 18%, and then maybe this quarter you're 24%. You wouldn't qualify for first, but you would qualify for second, or maybe vice versa. The amount that's eligible now, so it's easier to qualify both on revenue, size of company, and the credit is 5 times as what it was in 2020. The credit is 70% of your wages, up to $7,000 per employee for every quarter. So I'm kind of using the same employees. I reduced the wages a little bit. We're still a maximum of $10,000 of eligible wages because it's a $7,000 maximum per employee. So now we can see on, paying my employees $43,000, I can get $29,000 back. read a Forbes article, I guess it's about 3 weeks ago now. And the Forbes article talked about tax planning under this employee retention credit. And again, I use the term that, or they use the term retention tax credit. It has really nothing to do with payroll taxes. It is money that you're getting back on wages paid. So you can see here, $43,000 on wages, I'm going to get $29,000 back. Certainly the amount of taxes you paid was far less. The amount of taxes the employee paid is far less. It's just the fact that you report this $29,000 on a payroll tax return is why they call it a tax credit. But that will likely exceed. But this Forbes article talked about tax planning. And the best example I have is we have a golf club that we do. And I checked in with them around the last week of March last month because I know for 2020, their revenue was down. They were down over 20%. So first quarter, I was talking to them. And I said, how is it looking for first quarter? And the controller said, it's going to be close. We're not quite sure, depending on how this last week is. And my advice to them was, don't just sit there and watch it go by. Do something about it. You can stop revenue. And there's creative ways you can do that. And this Forbes article talked about send your top salespeople on vacation for the last week of the quarter. Hold off on sales, do something good, put them on vacation and reduce it. It talked about an AC contractor. And if you're installing ACs for clients, the majority of the money you get is really, you're just going to turn around and purchase the AC unit that you're going to install. So the article said, have your customer write the payment to get the equipment directly. Don't run that revenue through your business. So there's some tax planning. And what I talked to this club about, and I don't know if they did it, I haven't followed up with them. I said, if you think you're going to make more revenue in the last week, give it away for free. Customers come into the restaurant, don't tell them, at the end, surprise them, comp the check, say, hey, the meal is on us this week. Or if your members go and play golf, don't charge them green fees, comp it at the end. I estimated for them the credit that they would get if they qualified for the quarter. It was $498,000. So I said, who cares if you're going to give away $40,000 of free meals? Your customers are going to love it, and you're going to make out on the deal tenfold. You're going to get close to $500,000 back. So, all right, it may not feel good as you're giving out free meals for a week or so, but the payoff could be huge. So, so if you do fall into that revenue and you're floating around that 20%, take some action. Don't just sit there and hope it's going to go your way. Take control of it. There are some exclusions on this, and there is a lot of confusion in this area. And unfortunately, I have a lot of my battle is with accountants and CPAs. I have one company right now, they're a restaurant, and I've been trying to get him to take advantage of this. And he's come back and says, my accountant says I don't qualify. And I keep telling him, don't listen to your accountant. Let's just go ahead and do this. There's some additional information we need. Let's look into it. And again, he came back and said, no, my accountant says I shouldn't do this. I don't know why. I don't know what's wrong with his thinking in this, but I think it has to do with some of this information that I'm going to give. And this is a restaurant that I was talking about. So I know 100% they were fully or partially suspended between March 17th and September 25th. 100% without a doubt, you qualify. So the confusion can be, you can't include wages you pay for severance because the name of it is employee retention credit. And if you're paying severance wages, well, you're not retaining the employee, you paid them to leave. So you can't count that. But the second item, you cannot include wages you paid with forgiven PPP funds. Now, initially when the CARES Act came out with this retention credit, so this has been around for over a year now, but when it came out, Congress and the government thought that COVID-19 was going to be short-lived. If you remember back a year ago, we had the was it 15 days to stop the spread. All right, we're going to be over this in 15 days. Then it went to 30 days to stop the spread. So government back then said, we're going to do two big benefits. We're going to give you PPP or employee retention tax credit. And if you did one, you could not do the other, period. Because they were both really great benefits. And again, they thought it was a short period of time. Then Congress and Washington got deadlocked. The CARES Act was the last thing that passed. We went 8 months. And then when they finally got it passed in the CA Act in December, they said, you know what? We're going to let people do both for the entire year because this certainly went on a lot longer than expected. And then that same act, they opened up PPP again, and the frenzy all went PPP. And this piece of the act has just gone by the wayside. And the CA Act that allowed both to happen does say you can't overlap. And I'm going to give an example on the next slide. In essence, the government is saying through all of these items is that if you're paying wages and you're getting money to pay those wages, then you can't count those wages. It wasn't your money to begin with. So the family's first sick leave credit. All right, the government gave you a credit for that wage, so you can't count it again. The government gave you money to pay PPP. You can't count it. So here's the example I use for restaurants. So we know restaurants, full or partial suspension. I don't care about revenue. We did a pizza place the other week. His revenue went up in 2020. His pizzeria is at near a large community, and his deliveries just skyrocketed. And his revenue was up every quarter. Does not matter. He was considered fully or partially suspended because he could not open up his little, I think, 8-table dining room, which he's like, I don't even care. He got a PPP on May 1st. And actually in that example, he spent his PPP in like 2 months. He did the 8 weeks. But here I extended it out a little further. I said, you know what, you got the PPP money May 1st, so May, June, July, half of August, so 3.5 months. It doesn't matter if you say I'm using the 24-week period. You only count the period of time you actually spent the funds on the wages. So if your PPP was 100,000 and you spent that on wages from May 1st to June 30th, then that's it. That's your period of time you exclude. So when we look at the ERC, we say, all right, well, you were suspended March 17th. You got your PPP money on May 1st. All right, we don't count after that, but we can count from March to April 30th. We then exclude the PPP period of time. And then on the other end, we go, all right, well, now the PPP money ran out, so we're going to count wages from August 16th through September 25th. So you have those two periods. And that's where we can go back to those other slides where you say, all right, how much wages were paid during that period of time. And 50% of that wage you get back as a tax credit. So they both can coexist. If you have not filed for forgiveness, you can maximize the ERC, the two working together. And
check this out. Multiservices La Chispas.
So back last year, doesn't matter if you use only a portion of PPP, some staff. Yeah, so if you, so it's the time you spent the PPP. So for example, trying to think of an example on this. So if your PPP was $40,000 and I'm not sure if you say I spent it on these 3 people and I didn't spend it on these 5 people, how that works. But basically any PPP money you are filing for forgiveness on staff, you can't count that towards ERC. I guess no matter if it's a period of time or which employees, you just have to be able to account for it. And what I was going to talk about is if you had asked me last year when the PPP forgiveness opened up, what was it, in the fall, I would have told you don't file for forgiveness. There's no rush. You don't get a ribbon or trophy for getting PPP forgiveness first. Just don't do it. Wait. And right about now, again, through the ARP Act, the forgiveness process is much easier. So now is a time you should be filing for forgiveness. But I still wouldn't file for forgiveness until you check out the ERC. And the reason being is, if you got, let's say, $100,000 PPP loan, and let's say you spent $200,000 on wages, during your qualified period, during this period of time, March 17th to September 25th, you spent $200,000 on wages, and you got $100,000 PPP. So if you spend that entire $100,000 on PPP, that would, in essence, leave $100,000 you paid for, 50% credit, you get $50,000. All right, great. You may seem like that's a lot of money. But if you say, you know what, on the PPP, I only have to spend 60% on payroll over a 24-week period. Great. What I am advising restaurants to do is, and again, and if you had asked me prior to December, I would have said, spend 100% on payroll. It's easy. Forgiveness is easy. You just send them some payroll reports and you're done. But now I will tell you that is not the wise decision. Include rent, include utilities, include PPE you spent on your employees, include every other expense you can use for forgiveness. So the minimum you have to spend from $100,000 on payroll is $60,000. So now during that period of time where you spent $200,000 on payroll, you only subtract $60,000. And now you have 140,000 left eligible for the ERC. And half of 140,000 is $70,000. So just by putting non-payroll costs in your PPP and doing some proper accounting, you can get another 20,000 in that example towards a refund to you. So it's not a straight cut one way to calculate this. There's a lot of creativity that can be done to maximize the ERC. I was talking to another restaurant, and they qualify for the ERC for first quarter of 2021. They had the revenue drop. They are not going to be eligible for second quarter forward. So we think first quarter is the last quarter they're going to get ERC. They got the PPP loan on March 1st. So that means, using my example here, they would use ERC from January 1st to February 28th, and then use the ERC March 1st. I called that client. I said, look, you got the money, but on paper, you're not going to say you spent that money on payroll. When you go to file for forgiveness months from now, you're only going to include payroll reports after April 1st. And the reason being is now we can take the entire first quarter and say that is 100% available for ERC. He's going to get 70% of the wages he paid during those 3 months. And the difference, we had calculated it, if he only did the first 2 months, he was going to get about $80,000. And as we did the entire quarter, he was up to about $160,000. So it was actually almost double, because in March he had a lot more wages paid. His business was coming back. So it was a huge difference. And all he has to do is now spend his PPP money from April 1st. And he has 20 weeks to spend it rather than 24 weeks, because he cut off the month of March. And he said, you know what, I'm not going to have any problem spending the money because my business is back. I should be able to spend it, well by July. So he said he was good. So there's a lot of creative accounting, I guess you can call it, to maximize this ERC. So that is the end of my formal presentation. My email is on here. You have Holly's contact information in the chat. I do write articles once or twice a week. I post them up to blog.paymaster.com. So there's a few articles on the ERC. And as Jean mentioned, I look to help our community, South Florida. Even if you're not a client, you can shoot me an email, and I'm happy to answer questions. I did a presentation last week, and I brought up, I have a 34 chain email back and forth with a company who is not a client in helping them, walk them through this. So it doesn't matter if you're a client or not. I'm looking to help you. If this is something that you're not familiar with, or your accountant is not familiar with, and as I said, there are creative ways to do this right. We are happy to take on that work for you as well, even if you're not a client. I have heard that ADP and Paychex and the other national payroll companies are not doing this for their clients. They're sending you somewhere else, and unfortunately, that somewhere else may not be anywhere else. So we're happy to do that for you. So I'm looking to see if there's any questions that have come up, and I don't see.
The only question I saw and I don't know, there's really much you can do with it. Someone was questioning if their CPA disagrees with you on
if
this.
there's so I get a lot of that. It is my biggest challenge when we are talking with companies about doing this. And I think some of it is just they're thinking of 3 months ago, and yeah, well, 4 months. 4 months ago, you could not do both. So it's just that they're not keeping up with this. And as I said to another person about their CPA, I am a CPA, but if you ask me a corporate tax question, I'm not going to know the answer. I don't do that. I'm just like attorneys specialize in different areas. I don't specialize in that area. You ask me a payroll tax question, I'm going to know 100% what the correct answer is and how it applies. So I think it's just that separation of what their expertise is. So I'm happy to talk to your CPA. I've had conversations, and after I talk with them, they go, oh, okay, yeah, now we understand. And another big source of confusion is if you go to the IRS website today and you search up ERC, the website tells you you cannot do both the ERC and PPP. They are that behind in updating their website. But about a month ago, there's a banner at the top of the website. It says, this information may not be current based on changes. But everybody overlooks that big orange banner at the top of the website and just reads the web page, and you'll be misinformed. I don't know why it takes the website so long to get updated, but there is. I will share my presentation with Jean, and that can be distributed.
Yep.
So if you have any.
And I just want to just second on that. I've run into that myself. We have all the chambers on here today with us. We were just eligible as 501c6s for PPP money ourselves this year. We are eligible for 2 rounds of PPP funding, not one. And I've had bankers tell other chamber executives, no, you're only eligible you got the second round funding. No, we got it during the second round funding, but for us, it was a first round. And the last chamber exec who took that back to the bank, I told her, tell the bank to call the SBA and get the direct answer. And they did, and we were right. We are eligible for 2 rounds. It's a lot of money to all of us and all our businesses. So you're so right, Romeo. Keeping this information current is really challenging for everybody. And I just learned even in the 3 weeks since we did this, you've obviously dealt with a whole nother level of questioning and looking at specific types of businesses. So there are a lot more answers even that I learned today than I, was able to pick up from 3 weeks ago. So it's an evolving process, I guess, is the best thing we can all say.
It is evolving. And here, I think you can see my screen now, the website from the IRS. And,
yes.
And right here, it says it only applies up to January 1st, 2021. And, and as you go on, it says you can't do it if you did PPP, but, right here, at least they did this recently that says this page is not current.
We're a mess.
Check back later, and it's 4 months now, and I don't know when later will be, but eventually. But like I said, I'm happy to answer any CPA questions. If your CPA says no, you're not eligible. As you would with like a medical condition, get a second opinion.
Right.
And I'm happy to give you that.
Exactly. Well, thank you so much to you and to Holly for being here again today. I think you've probably got a whole new group of fans. That may be good, that may be challenging, we'll see, but hopefully it'll bring some business your way, because it certainly will be well deserved. And really, thank you for just being so willing to share with everyone your knowledge and your skills. It's
Yes, you're very welcome.
It's been wonderful. So we will get this out. There was a question. We will send this recording and Romeo will send the slide deck. It will go to all your chamber executives who are participating on this call. So please feel free to reach back to them, and I'm sure they'll be happy to share that information with you.
All right.
Sorry, Holly, I have you stuck on mute. Yeah, because I finally did that to let me unmute everybody. So, okay. I think you can
I can talk now.
You can talk now.
Thank you, everybody. And seriously, it's no bother. Email me if you have a question. And again, in defense of the CPAs out there, there's a lot going on. As Romeo said, people have their fortes. And so to go and swallow an entire IRS website and be able to make sense of it in your spare time.
Not gonna happen.
Yeah.
Okay, well, thank you all so much.
Yeah, have a great day, everyone.
All right, Romeo, thank you once again. Awesome. Okay.
Bye-bye.
Bye-bye.
Thank you.
Thank you.